So, I think I found a strategy that will make me profitable. And I say that because I feel confident about it, and I've been refining the strategy for almost a month now, and I'm sick and tired of it, and I think this is the one. Like, these are all the other ones, all the other refinements I made, and the one I came up with today and refined to the fullest today is actually one I really like. The core basis of it, like 80%, is from the guy called Guru. I learned from his strategies, from his confluences, all that stuff, and I really like it. But the things I changed is basically the confluences that I like and the confluences that I don't like. I removed confluences that doesn't make sense to me, and I added confluences that actually do make sense and make me feel confident about taking my setup. So for example, I had like a confluence that was called Elliott waves confirmation, where you would draw like the waves and the subwaves, but it actually doesn't make sense to me, and I removed it because I don't feel confident trading that. So it's really you against yourself, because you can pick all the information you like, but if you don't like actually trading it, there's no point in actually trading it. So I removed those things. Also, like the moving averages, just all that retail stuff, I don't like it, so I won't trade it. So basically, what I'm focusing on right now is trading based pure on liquidity and price action, and because that makes sense to me, and I like trading from top-down analysis, from high time frame to low time frame. So for example, if you have a trade that makes sense on the higher time frame, makes sense on the mid time frame, and makes also sense on the lower time frame, and the liquidity is clear draw on liquidity, clear take profit, non-obvious stop loss, and just crazy good confluences, then I would like to take the trade because it makes sense to me. And if I actually win and it hits my take profit, I'm proud of it, because this was a nice confluences, nice analysis, nice DP, nice all of that, and that feels actually great to trade, and I want to trade like that. So without further ado, let's just go over it from top to bottom. I'm gonna explain to you guys the whole strategy that I'm using, and after that I will also give you guys some A+ setup examples for my backtesting, so make sure to stay till the end. So here we are, and before you're gonna say that I overdid this by designing my own trading strategy, just let me do what I like to do, because I like designing stuff, and it's more appealing to me to look at a paper like this with nice colors and a nice layout, so I can absorb this information even better. So let's go from top to bottom. What do we have here? Number one, what I do is check the weekly and the daily time frame. So let's say the weekly is bullish and the daily is also bullish, and of course I'm only taking longs. But if, for example, the weekly is looking bearish and the daily is looking bullish, I'm more focusing on taking longs, because the daily is more important for me here. The weekly is just to give me some more information. So after I find my bias, really simple, just looking at market structure, breakoff structure, are we looking for longs or shorts? After I do that, I mark out my draw on liquidity targets. So basically like highs and lows that are important for market to take out or just to trade into. So those are the daily open, the Monday range, so the Monday low, Monday mid, and Monday high, the weekly open, the previous week low, the previous week high, the monthly open, the previous month high, the previous month low, the yearly open, the current year mid, and just general lows and highs that are important to take out. So after I mark this out, I go to the hour 4 and hour 1 time frame. This is where I look for a point of interest. So let's say we're only looking for longs after we did step number 1. I'm looking for point of interest in the discount zone, and if we're looking for shorts, we look for point of interest in the premium zone. So on this time frame, and we need to find at least 3 aligning confluences, and I need to think like a retailer. So what I mean by this is, it will become more clear if I show the live examples, but just look where the retailers are interested in longs, in shorts, where they put their most obvious stop loss, where they take profit. Just think like that. It will become more clear later. But after I do this and find 3 aligning confluences, and this is my confluence list. So those are 10 of the confluences I do like the most, and as I said earlier, I remove the confluences that I don't like the Elliott waves, the moving averages, all that retail stuff, and this is basically pure price action. Maybe this is not, but I really like trading that. So let's go over them. The first confluence is the fair value gap with sell side and buy side liquidity. So basically, yes, a fair value gap is nice to trade into, but I really like more fair value gap with a low or a high just above or below it. So that's basically sell side liquidity or buy side liquidity. Then we have the volume levels. So if you saw my videos, I trade a lot of volume based price actions. So meaning the value area low, value area high, the point of control, volume spikes, naked point of control. So if you don't know anything about that, just watch my Instagram or TikTok video. I'll explain it there in detail. Then the next confluence is the supply or demand. That's one of the most important, I think, or order blocks. Then we have the golden pocket, the equilibrium, or the 0.786 that are nice levels to take as a confluence. Then we have key levels. So what I mean by this is just levels where just markets found a lot of resistance and just like magic levels in the charts that can offer nice trade opportunities. So then we have high time frame support and resistance. So high time frame, I mean hour 4 and hour 1. So just easy resistance and support can be a nice confluence. Then we have for liquidity equal lows, equal highs, or trend line liquidity. Then we have draw on liquidity targets. So what do I mean by this is just literally go back to step 1, and this can also be a confluence, all those draw on liquidity targets. Then almost last one, we have wick fills. So basically, I like to trade the 50% wick fill of a wick or a break of structure tap. So basically, when price trades below a low and then comes back to that low it broke for the break of structure, it can also be a nice confluence. And then we have basically inducement, and that's also one of the most important confluences that I really like. So after I found at least 3 confluences in the discount or premium, I can set limits if I have a nice RR and a nice stop loss. If I really like the setup, if there are more than 3 confluences and it's like an A+ setup, I want to set limits, and it's also a nice RR. But if it's not such a nice setup, I mean, it's a nice setup, but I don't feel like setting limits, it's better to say this, then I'm gonna wait for confirmation. So if I just set limits, I stop my strategy here, but if I wait for confirmations, I proceed further. So what do we have here? I box out this POI and set an alert. So from all those found confluences, I basically draw a box, so where all those confluences align, and I set an alert on TradingView. When that alert is hit, we go to step number 3. We wait for a minute 15 or minute 5 POI. So the POI is the confluence box. I wait for that to be hit 2 or 3 times. If it hits 4 times, stop a strategy. If it hits only 1 time and then goes up or down, also stop a strategy. But I need to wait for it to hit 2 or 3 times. So basically 2 or 3 sweeps, and then wait for a valid break of structure, break of market structure. It's also called Koch. I don't know how you should speak it out, but yeah, you guys know what I mean. Then we go to step number 4. So after we have those 3 sweeps or 2 sweeps followed by a break of structure, then we go and wait for a minute 5 confluences in the discount or premium, like inducement, imbalance, sell side liquidity, or buy side liquidity. So if the POI got hit and we have a nice break of structure, that means that my confluences were right. We have a nice pivot point there, and now I'm going to enter on the retracement basically, and these are the confluences for that retracement. Then this last step is just for my take profit and my stop loss. My take profit 1 is just at the low time frame, so minute 15 and minute 5 next low or high. Then I just take 50% out, and then TP2 is at those draw on liquidity levels or just general lows and highs. So this actually something I overlooked. The management is so important because it can determine if you're profitable or not. So what I'm going to do is only risk 1%. I close 50% at TP1 like I said, and I put stop loss to break even. Something very, very important. If the draw on liquidity for my setup is already taken out, then my trade turns invalid. If there's choppy price action or no momentum at all, which I do trade a lot and end up making a lot of losing a lot of money because of that, I just close a trade. I only want to trade at times where there's a nice volatility, nice liquidity in the markets, and I don't want to trade midnight on Asia session or whatever. So I only focus on only A plus setups, taking A plus setups, and I'm only focusing on taking maximum 2 trades a week, nothing more. Of course, it can be less. I can have weeks where I don't trade, but I really want to focus on taking those A plus setups because I've been losing a lot by just taking stupid trades, literally taking trades that are not following this whole system and are just not in my favor at all. So only focus on taking A plus setups, 2 trades a week, and I halve my size, so I risk 1% for 1 trade. But if I lose 2 trades in a row, I halve my size, so I go to 0.5%. That's a thing I learned from ICT. So what he does is basically, let's say he has a risk of 1% per trade. If he loses 2 trades in a row, he cuts his risk in half, so 0.5% for the next trade. He loses another 2 trades in a row, he cuts his risk to 0.25%. The only way you can actually increase your risk is if you make 50% back of the drawdown that made you go from 1% to 0.5 or from 0.5 to 0.25. So make 50% back, you can go up in risk. You lose 2 trades in a row, you just go down in risk until 0.25. Of course, you're not gonna go half risk until you end up only risking 0.0001% per trade. But you get what I'm saying. Just go like 3 levels, I think, down, and then you can size up after making those losses back. So that's the management part. The pairs, I'm only going to be focusing on trading volatile markets like Euro USD, GBP USD, gold, and Bitcoin and Ethereum. So that is that. And let's now go over some nice backtesting A plus textbook setups. So what do we have here? Weekly is looking bullish, daily is looking bullish, not gonna go over that. The confluences on the hour for an hour 1 time frame is really easy to spot. An hour 4, hour 1, I think, fair value gap. We have the golden pocket just below it, and we have some nice inducement right here. So we have 3 confluences, I think more, but let's just keep it with that. And then we go to the 15-minute or minute 5 time frame. What do we see? Beautiful trade actually, because look at this. We sweep into the box, we sweep another time into the box, break of structure on the minute 5 time frame. Not sure about that. Let's see. Yes, break of structure on the minute 5 time frame. Look at this. Sweep, sweep. Now we anticipate the break of structure, break of market structure. We have that here. Then we literally just enter. This is the best snipe I ever did on my backtesting. Look at this. We look for POIs after that break of structure on the lower time frame to take our entry. So what do we see here? A small minute 5 fair value gap, and on that equilibrium of the fair value gap, I put my entry. And look at that. It's crazy, right? It's just the perfect entry for the trade, and it just went straight to take profit because the high time frame is bullish, because everything just makes sense. So the next trade will be like this. It's a short because, as you can see, we shift market structure on the weekly and the daily. We're all bearish. Now we need to find confluences. Here I don't wait for a confirmation on the lower time frame. I just place limits. And why is that? Because it's just so clear what price is doing right here. This is what I meant in the beginning with just think like a retailer. Look at this. This is price action. We're bearish. Okay, we're bearish. But where are all these people putting their stops? They're putting their stops right here. This is pure sell side liquidity, and we have an hour 4 fair value gap above it. So when we're trading right here, I was just waiting. Let me see. I think it was on the 15-minute time frame. Yes, right here. We're going down, but everyone who was going to short here obviously was going to put their stop loss right here at this inducement. You can also call it sell side liquidity, but because there's also a nice fair value gap on the RO1 time frame, and because there's also some nice just resistance right here from prior price action, this is actually a nice setup, and I put my stop loss at a high that is not obvious, like this, above this supply, and look at this trade. It's actually amazing. Just following high time frame structure, following liquidity, nice confluences, just entering where everyone gets stopped out, which is right here. Then the last trade was also a limit, and it was this one. This was a little bit more risky, but also still following my plan and played out perfectly, which ended up being a 2.57 RR. So all these lines you see here are just basically the draw on liquidity targets I talked about in the beginning of my strategy. So the weekly open, Monday range, all of that. So what did we do? We were still trading bearish, only looking for shorts, but of course everyone was looking to short the market. Every retailer was just shorting and putting their stop losses at obvious places, which is example this high right here. Everyone's putting their stop losses, they're trying to short this. So what do? I look for more confluences, and I found them because there's also fair value gap right here. It's also in the premium, and I think it's also let me see, at the golden pocket. No, it's at the 0.786, so also a nice confluence. So I didn't draw out the box, but you can see this is just basically the POY. I enter on this sell side liquidity, and we just keep continuing the high time frame trend. So I think I'm just gonna keep backtesting this whole summer actually, because I can take on live trades, but I don't feel confident doing both at the same time. So I'm just gonna focus on backtesting only, and then after I really feel confident, I'm only gonna go to the live markets and buy some more funded accounts. But right now I'm just taking stupid trades on my live accounts. I'm losing a lot just because I'm not following my strategy. I just want to enter trades for no reason, little to no confluences, and that's why I'm basically losing my trades. And if I actually backtest it, I'm actually profitable. So I should just keep focusing on my backtesting, and I think I should just trust the process. So if you found any value in this video, just make sure to leave me a like, subscribe, turn on the bell, and just have an amazing rest of your day. And I'll see you in the next one. Peace.